Hey everyone, and thanks for joining a special episode of DIV Innovators, again here at 47G Zero Gravity Summit in Salt Lake City. Honored to have Rick Sanford, an aerospace and space guru, currently the CEO of Complete Aerospace Solutions. Rick, thanks for joining.
It's a pleasure. Great to be here.
Well, you have a fantastic background.
Well, thank you.
I would love to walk me through it. I mean, some early days as a crypto guy and through your journey to now as the CEO of this company.
It's been I like to say I'm a bit of a mutt. I started as an enlisted crypto technician in the Pentagon, and in the days prior to 9/11, when you could actually look at driving innovation, when you could look at learning things that were outside of your particular MOS, and be able to really take advantage of young energy and drive that forward. I took a part-time job working 50 hours a week.
There you go.
State Department while I was still an enlisted guy, and I went to college full-time. So I slept about 3 hours a night for 3 years or so.
Wow.
Kept me out of trouble in my late teens and early 20s.
Yeah.
But that really set me up, I think, for just an amazing career. I joined the Air Force for a career. The first round of grant funding came out in 1986, and they said you can realist or get out. I was living with the 3rd Infantry on Fort Myer, and I was tired of barracks inspection 4 days a week. So this is the young enlisted guy's problem, right? And so I got an assignment to Lackland to teach in the crypto school, but I was going to live on base, and that was the decision that caused me to go take a job at the State Department as a contractor, as a design engineer there.
Okay.
So I spent some time at State. I was involved in the Bush Senior's war on drugs, involved in the stand-up of what's now DHS.
Oh, wow.
With Governor Ridge. Really an interesting, fascinating time as a young engineer, and then moved into program management, and then moved out of design engineering and program management into more of the sales and marketing side of things as a mission architect, and spent time at Timeplex Federal Systems, a dozen years at Cisco Systems, which was just an amazing experience running the intelligence community business, starting the space business there. And the focus was on mesh communications in space, cislunar space, all the way down to LEO. We were 15 years too early to the market. Elon was still at PayPal when we flew our first router in space. But just a tremendous opportunity working with wonderful people at a wonderful time in the tech marketplace to drive innovation in new ways and really bring commercial technologies to bear on the mission critical side of programs. I left Cisco and consulted for 10 years, companies like Lockheed Martin and Intelsat and others. And that was a full scope engagement, everything from restructuring of large organizations, spin-in of small companies, to expanding and growing business, proposal writing, those sorts of things. And then really started a stint in an aerospace satellite manufacturing company called Surrey Satellite Technologies in the U.S. They flew my first router, actually.
Oh, wow.
Built my first router 5 years prior to my joining them. I spent some time at Eutelsat America Corporation with a company called Emergent Technologies, which does all of the ground control for International Space Station. And then about 2 years as the president of Beyond Gravity USA, which is the rebranded RUAG Space Swiss arm. I spent 11 months in Decatur, Alabama, running the large-scale composites manufacturing plant there, right in the ULA property, which was fascinating. And then most recently left a couple of years at a third-gen in-space assembly and manufacturing company called SpaceBelt. So
That is cool. I mean, from enlisted crypto guy to, project management to comms, space comms, ground comms. What a journey. Entrepreneur and big companies.
yes,
So you've seen the spectrum,
I have seen the
a
spectrum.
wealth of experience. That's very cool. Through that journey, give me like 3 tenets or 3 things that you now hang your hat on as you lead, and we'll talk about a bit, but Complete Aerospace Systems.
So tenet number one is it's really important to understand what the actual mission need is. Many times we see a requirement if it's a federal opportunity or program, or we see a visionary statement, and really understanding what the intent of that technical need is very important. And I think with a diverse background like many people have in the industry, being able to first off take a look at is the ask commensurate with the expected outcome? That's number one. Number two is that the commercial world, I believe it's incumbent upon the commercial industry, commercial companies, and individuals to bring their wherewithal and capabilities to bear as a solution offering versus let's go study something to death. Let's get paid to study something to death. Let's drive innovation from the front and really leverage that. And then thirdly, frankly, is really to listen and make sure you keep the finger on the pulse of what's actually required to support the delivery, empower your staff to enable them. Smart engineers with enough time and money can build anything. There's never enough time or money. So how do you prioritize the execution and the engagement and create the best opportunity for success?
Awesome. Well, let's double click on your, tenant number two, providing solutions. From my time, spent some time at Lockheed Martin Skunk Works, the problem was if the government didn't pay us to do it, we're not going to do it. Now that may be a little bit prime, and I think the tides have shifted on that.
I think it's moving in the right direction.
Now you've got, and I think that was a lot of the way contracts were, the way they chart, we were able to charge. Then you've got all of a sudden, the Palantirs, the Andreals that are just showing up with, here you go.
That's a perfect example of, I think, where companies need to be, show up with a tool set that matters. But I think the other big shift that's occurred is advancements in commercial technology. And we see this in compute. We see it in government over the decades. From time to time, the government is leading on the innovation side.
Right.
We're in a cycle now where industry is leading on the innovation side. And we should leverage the investments in innovation on the commercial side to really drive opportunity for programmatic success and get involved early and focus on helping the program managers and the mission managers on the government side or a commercial company be successful in their execution.
Yeah. Well, I think part of the, two things. One of them is the government has a problem. They then deem this is the solution to solve that problem, but they only, you only see the world from the seat that you're sitting in. And the commercial now, especially through this innovation, see so many other ways to tackle it, different ways to fund it, different ways to deliver the outcomes that are required. So I think that's changed. The other thing I think has really changed is, the way capital is being deployed. 10 years ago, no one wanted to spend a dime in VC world in hardware or tech in the defense because it takes forever. Why do you think that's shifted? Why do you think we've seen kind of the shift in, the financial perspective?
I think the reality of the advancements in compute, the advancements in software that were the darling of the investors during this period of time that you're talking about. The reality set in with investors that you actually need hardware for this software to run on, and a dollar invested with a company to deliver a capability to the government. If the company is thinking how I perceive to be properly oriented towards commercial success, then that dollar supports commercial development, which generates a commercial revenue stream while at the same time supporting a government program. And so you kind of get a 2-for-1.
Yeah, it's a great point.
A dollar invested, which I think is something that the investors and industry can capitalize on if you can really stay oriented towards commercial first, and then supporting the delta for a mission requirement on the government side, Or if you are a government contractor only, looking for ways to spin out that technology at an appropriate time, to be able to expand and grow that commercially, gives your investors comfort that the risk of a program being canceled isn't a risk to their cash into your organization.
Yeah. And I think the primes used to own all that. And there's a shift in, the acquisition community of, I saw this a lot. Primes are great. They have a great need, but innovation is happening, especially now, to your point of the tech innovation, the speed, the different thoughts. They got an idea, they can use AI to help generate these ideas and drive solutions quicker, and advanced manufacturing, that all of a sudden, there's just a different way to go about it. And the government recognizes that and is starting to give money to other places, which I think also reduce the risk that you got to cross that chasm, if you will, back in the day where that was, you basically had to get Lockheed to buy it or Boeing to buy it.
Right.
Now, government just buy it because they want to get the latest and greatest.
I think there's I like to talk about this challenge, a dichotomy really, as it's the and equation. No commercial startup could ever hope to do a program of record scale of mission deployment and support like a large scale systems integrator. But the pace of innovation and change, small agile teams, the ability to drive innovation and marry that with the expertise in the industry, even companies that aren't part of aerospace have a tremendous amount to contribute to aerospace, so long as the best commercial practices of the commercial industry, electrical engineering, whatever it happens to be, and the aerospace community are followed. It's a win-win. And so I think we're in a season of and. We have a large scale systems integrator. Look, we've seen, and I spent 3 years as a Boeing Horizon X portfolio company, the investment arm of Boeing funding innovation, not spun into Boeing, but Boeing could use the output of it. It's a great recipe for success to capitalize on the heritage and the fantastic work that Boeing does on a daily basis, augmented with companies that they see a need for in their supply chain. They're willing to fund them. It's an exciting season for capital, and I would argue for the commercial sector as well.
Absolutely. And it is different for folks that don't know, generally speaking. So I'm not going to get specific, but like the venture arms of primes, I think even I'd say the directors or the, folks that are working are not paid on the return on that investment scaling. They're paid on how much top line revenue that investment brings to their current portfolio set. Correct. Or expanded portfolio set.
Correct.
Which is very different than venture driven targets. So their investments are also different, but yeah, it's pretty cool to see, that commitment to bringing that technology into partnership with the prime.
Absolutely. Doing the right thing for the right reason just makes good sense across the board.
Absolutely. Let's pivot now to Complete Aerosystems. I know it's a pretty new company. I know it's part of something bigger. Talk me to how this came about, and you can talk about both companies and how they combine. But I think it's fascinating, and I'd love to pull the thread on.
So the core thesis with Complete Aerospace Solutions is that there is a well unknown and understood need for innovative companies to be able to have the capital necessary to realize the vision of their technology, of their goal, of their mission support. And many times there are so many new companies, and there's a rather limited set of dollars. Being able to make blanket investments in a 10-to-1 traditional sort of VC ratio scenario doesn't offer confidence to the company that's seeking investment. They have to give up a fairly big share of their company in order to receive that kind of money, and it's not necessarily the best solution for the investor, because the downside risk of what's happening in the company isn't mitigated. So our thesis to the market is that we bring intelligent capital. We are not a VC. We're a company that is working with a syndicate of like-minded companies that are defense and aerospace friendly, many of whom have served like you and I have, and really understand the needs and how the Department of War and defense writ large is different than commercial, but also see the need for commercial growth. So what we do is look at companies that are trying to drive innovation that fit a thesis that supports mission growth, that support technical innovation, and allow these companies to run. And whether it's a full acquisition, whether it's an investment in, whether it's a reverse merger, there are lots of tool sets out there to preserve intellectual property, to preserve ownership to the current owners, but enable them to run. And then we participate in the growth and share only in the growth as these organizations are successful. Complete Aerospace Solutions is one of 5 companies in the Complete Financial Solutions conglomerate holding company. We have a Complete Armory Solutions group. We have a real estate arm. We have verticals that are oriented towards companies that supply capabilities with this same problem, the same opportunity set. And unlike some of the models that have been tried previously, our success is tied entirely to the company's growth and individual company growth, not requiring the companies to necessarily support one another and grow as a group. But if you have a superstar and that superstar wants to go public in 18 months, awesome. They should go public in 18 months. We want to support companies that have needs for capital, that have great ideas, that are generally speaking revenue generating with positive EBIT, and for the aerospace world are between $10 and $200 million in revenue, and are really looking to step on the gas and grow.
A lot there. Let's look at, let's just create a use case. So I've got an aerospace company that's making some capability to send to space. They're 10 million in revenue, but they're not through that chasm of death that we talk about. They don't have a program of record. They're still trying to validate. They've got maybe 3 things that have, set to launch. You come in and go, we could provide, just talk me through, we could provide X amount of capital. That'll help you get to here. How do you structure that deal? What, in theory, I don't know if you've done any yet, but what would that look like? Or where are you guys trying to take this?
So again, it's case by case, obviously,
Sure,
but in a hypothetical scenario, we would talk with the ownership. We would understand the technology, understand their customer base, understand their supplier base, understand really what are those things that are blocking them from being able to step on the gas and grow. We would make a risk adjudicated decision based on the information that we received along with the financials. And we have had conversations about some things as simple as a reverse merger, where we would create a shell within Complete Aerospace Solutions. We would merge the company that we're talking about investing in or acquiring, reverse merge that company into the shell. So at the end of the transaction, the only thing left standing is that company as a wholly owned subsidiary of Complete Aerospace Solutions. The company maintains its board, its leadership structure, all of its staff. And so that's one example on one end.
So, but you mentioned you're not taking any of the company, just the growth. So, but if you're owning it,
so
maybe I misunderstood.
Yeah, so, but it is a wholly owned subsidiary. Doesn't mean that we own the company per se. They're a wholly owned subsidiary that has an opportunity to grow. So the benefit for the company is they get the funding associated with Complete Aerospace Solutions acquiring the company. It's their money, and as the company grows, and let's say it grows 10%, we would share in a small portion of that growth on a given year.
So there, I'm just trying to break it down to knuckle dragon fighter pilot language.
Sure.
We're doing whatever they believe, and you agree through this acquisition, they're going to have access to, let's say, 30 million in capital.
Sure.
They still own 100% of the stock.
That's correct.
and then you take almost I forget what they call it on Shark Tank, but you're going to take of all your growth, we get some percentage,
Correct.
0.5%, 2%, whatever that number is, until the exit.
Correct.
That's pretty cool.
Correct. It's a very, very, very different model. And we do have tools that allow us to make minority investments, to allow us to make some bets on some brand new companies, very small companies that are just generating revenue, that don't yet have scale. As we are successful in the core market of $10 to $200 million revenue generation companies, then taking additional risk and looking at real startups and helping fund the first prototype or fund the first go-to-market. That's also in the tool set, and it really depends on the company, the technology. We bet on the jockeys, the leadership.
Is anyone else doing this? I mean, I just find it fascinating because every VC model that we're under, every round you're selling 20 to 30% until you get bigger, and then you don't need as much capital. And so, as founders, as employees that own the company, you're down at some point, to 15% of what you started with,
right?
Of what your initial allocation was, or even lower, much lower. Even if you go, I mean, it's a bigger pie if it's scaling, so those numbers don't necessarily equate. But this one is very different. It seems super encouraging to companies. You guys get to bring in your expertise, your knowledge, your connections. They still own it, so it doesn't turn into a complete, like, we're selling away the whole company. They own control, but now you just get to feed off the,
That's right. What I think the direct answer to your question is, I think that there are various companies that offer pieces of what we're doing. I think the takeaway point for this question is that everyone in our company has been an entrepreneur. Everyone in our company has done the cram down dance, which is not fun. Everyone in our company says, gee, I wish we would have had X. And with the depth and breadth, with 5 different verticals, but only 5 verticals, and a defined thesis for each vertical, it gives us the latitude to engage perhaps differently, all in one place, than might otherwise be the case in a traditional.
In your due diligence, you're finding the companies that are very different. I mean, you're finding rock star companies.
That's correct.
But you also have a unique network to find those companies, or other people, let's just say, common hardware tech companies. They're listening to 1,000 pitches a day. You don't have to go do that.
That's right.
How is raising capital for that? Have you seen success in the ability to raise capital on your side?
It's very interesting. So my boss his name is Ken Tapp, and he asked me to come and join the firm just 4 months ago. And he said, Rick, the problem that we're going to have is we will not be able to find companies fast enough to deploy the capital that's interested in participating in this model. So we have our syndicate built, and we are off to the races. And capital is not a problem, ironically. Coming from a startup environment where you're scrapping to meet payroll, to being able to credibly sit and have a conversation with an organization and say, the need is $200 million or the need is $25 million. We have a group of like-minded individuals, a coalition of the willing, that believe in the vision space, that believe in the verticals, and that believe in this thesis, that are as excited as can be to participate. And combining our expertise with their expertise in capital is a recipe for everyone's success.
So do you raise, in the conventional sense, a fund? Do you create LPs for each different?
No. So what we have is a pool, and we are not raising a fund ourselves. Our capital partners each have funds and each have mechanisms that they're leveraging. We have a lead. We have a book runner. We have groups that are participating. Many of these companies work together on deals already. And so we're able to capitalize on their best practices for deploying capital with great success. And we add this additional layer of risk adjudication to capital that we deploy. It's a really exciting time.
That is super cool.
Really, really, really exciting.
That is neat. So where do you see, Complete Aerospace Solutions in the next 3 to 5 years?
We are currently working on a list of 20 companies to do diligence on. We have started a preliminary diligence on 2 of the 20, and we have probably $500 million in revenue generation across companies throughout the verticals in Complete Financial Solutions to start. And you have to go slow to go fast. It drives people crazy. It drives my kids crazy, but we really do have to go slow to go fast. But we have, call it an aggregate of 50 companies that are at the top of the list. Some of these companies with our partner organizations, they've already done diligence on them, but they're too small for them to acquire. It's really interesting in this world where companies that are less than $500 million are too small for some investors to consider. But if our partners have already done the diligence on them and can marry them with our expertise, being able to really run and grow. So I think we will very, very quickly scale to well into the billions of capital deployed, supporting organizations across the 5 different verticals.
That is super exciting.
It's incredible.
And the buzz, I mean, you can feel it here at the conference, the buzz around this innovative tech in aerospace and space is just undeniable.
It's amazing. I'll tell you, the state of Utah, it has been here at this conference, and having had the good fortune of spending some time with some of the state legislators, being in DC a month and a half ago with Senator Lee and his staff from the state of Utah. The level of energy, the level of work that the state has already put into clearing the decks legislatively, 31 bills passed in the past 4 years to be able to support innovation at Valley Forge impact parks, to be able to drive advanced aerospace and defense manufacturing as a byproduct of the Sentinel-1 power system and the power infrastructure development that's going on. My goodness, it's a super exciting time in the market.
I'd have to agree with you. I mean, I've been a lot of places. Can you think of another state that has, because this isn't really, 47 isn't really a state
Right.
economic development, it's private. And I had Aaron on earlier talking about it, but can you think of another state that has an organization like this that is as effective?
I cannot.
It is unbelievable how.
Cannot. I was speaking with the 47G team, and we had a great example in the state of Colorado when we became the #1 aerospace state in the nation for a short period of time. We had a coalition of the willing, literally called the Colorado Space Coalition. It was led by passionate people. It was an unfunded engagement, and we had smart people from across the industry that wanted to be involved. And as the political winds blew and changed, things changed significantly in the state. And 47G, they are doing the right thing for the right reason, and they're doing, as the Navy would say, they're doing yeoman's work. They are really clearing the decks. They're providing, a conference like this. This is 5 times the size it was last year.
I know, it's unbelievable.
It's unbelievable, and there's no arm twisting. There's no hard sell. It's a very ambitious goal of growing GDP in the state of Utah from 20% to 40% in aerospace. And frankly, we're really excited about having a potential to help support that growth with aerospace companies, divisions or headquartered right here in the state of Utah.
Yeah, it's so exciting. And yeah, hats off to them, because this needs to be modeled. It needs to be case study.
I agree.
And every freaking state that has any defense should follow it.
This is a tremendous.
I don't know if you can do it without the political. I mean, not all states they want to be supportive, but the political will behind it isn't there. So
even if it's not aerospace or defense per se, this model, this reimagining how you develop infrastructure and how you support industry,
yeah, you're right.
is tremendous.
Yeah, you're exactly right. It is true. Well, Rick, this has been so fun. Really appreciate your insights. What a cool thing that you guys are tackling, and the way you're going about it is so innovative in itself, in the finance, in how to bring capital and really capability to our warfighters. That's what it's bottom line.
We're excited. We're all patriots, and thanks again for the opportunity and for your service. And super, super exciting. So,
yeah, how does someone, if someone wants, do you guys take pitch? Like, does someone just reach out to you? How does someone get connected with you?
Sure. I mean, an email to rick@completefin.com is a great way to reach out to us. And we are open to really talking to anyone that is driving innovation and has a great idea and good customers or good prospects, letters of intent, and just need to help themselves get over the hump.
Yeah.
We are excited and energized to be working in the industry. It's good to be alive at this age and have the benefit of a crazy background that really, I think, helps in a conversation with a company facing a certain circumstance. Between our team members and our partners, there's likely someone has walked down the same path before, and we know where the bear traps are or were, and can help try to avoid some of those.
So good. Thanks,
Really
Rick.
appreciate it.